presentation in just a few moments. So everybody that's tuning in right now, just hang tight while we go live on all of the platforms here.
And today, when we get into the presentation, we will be speaking about DSCR loans, specifically for short-term rentals. And that will be the topic for today. And it looks like we are live on a few other sites. So thank you everybody for tuning in. We will start today's show in just a few minutes.
And what we'll do here today, we'll go through and price some different loans like we do every morning, and then we'll have Jose pull up some short-term rental quotes with these DSCR loans. So some amazing programs here, but we'll start with having Nick price out some different loans as we do every morning. We're going to go over all the different types of loans here and show you the actual real live rates. All right, so we'll start the show in just a minute. We'll go over some real live rates, and then we'll go over some rates and talk about the programs of our short-term rental DSCR programs, which is an absolutely amazing opportunity. So with that being said, why don't we go ahead and get started here, Nick?
Okay. Let me do my intro. So thank you everyone for tuning in. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in non-QM and alternative loan products, as well as all your conventional FHA, VA, and USDA products. So we like to do this show every day to talk about the real rates in the marketplace and talk about some real scenarios that we can offer from our team here. So today's topic, we're going to present, as I mentioned before, are our DSCR investor loans. So these are some of our most popular products. In particular, these can be used to purchase short-term rental properties such as Airbnb, VRBO, very popular request right now. So I'm joined today by our sales manager, Jose Gonzalez. We'll go over a detailed example of how we can use these programs in order to get our investor borrowers into short-term rental properties. Also, we'll have Kyle Hiersche, our COO, talk a little bit more about what our team specializes in. So now that we are live on all platforms, let me go ahead and start the regular content. So give me a second and let me pull up our rate engine for today. All right. So this is our pricing tool. Remember, this is for our mortgage loan officers, our mortgage professionals. So this is a tool we'll go through today that will show our pricing, our live pricing for today. But if you want a full loan estimate with all of your full loan terms, please get with one of our licensed loan officers. We're licensed in 16 different states for residential, primary, second homes, all the regular stuff. And then we can do what we're about to talk about, the DSCR business purpose for short-term rentals, which will be our detailed topic today. We can do those in most states as a business purpose loan. So a lot of different options. But let's go through and check out the rates for today. So for our first example, we always want to pull up a standard scenario. So we'll slide our LTV up to 80%. So 80% loan to value, which means 20% down for a standard conforming loan. We'll go through all of our other loan options here in a minute. But for our first scenario, we will do a conforming loan. The desired price here of 99 basically means that we will shoot for a price with 1 point in buy down. So in this rising rate environment, most of our requests from our customers are to buy down the rate a little bit. So we'll put these scenarios with 1 point in buy down as our target. That's basically our most common request. We also have our temporary buy down options and all kinds of different options in order to get a little bit better rate when the rates are a little bit higher right now. All of the rest of our scenario will be set pretty standard. We're going to do a purchase. We're going to do a fixed rate 30-year. And for our first scenario, we'll do a primary occupancy for a regular single family home, 1 unit, and it'll be in Miami-Dade since that's where our office is based. All of our scenarios here will use a 760 FICO for all of our little estimators and a 40 DTI, debt to income ratio. So these will be our basic parameters we will run for today and check out all the different options we have. So let's see what the rates are this morning from the mortgage calculator. So here are some specialty programs. There are some area median income for the borrowers to qualify for these specialty programs. So these are a little bit special. The rates are around 5.75 or just under 1% in buy down. But let's scroll down to our standard programs that anybody can qualify for here. Standard conforming 30-year fixed looks like a 6% rate for a primary purchase for just under 1 point buy down. So the rates have gone down since yesterday. I believe yesterday it was at 6.125, and today it's gone down a little bit. So this is why we do the show. We want to make sure we check it out every day, see what's going on. You guys can see the markets are pretty volatile right now, especially in the mortgage markets. So let's go back to our quick pricer and check out a scenario for someone who may not qualify for conventional financing. So typically our go-to option for someone who may not qualify for a conventional purchase, whether it's for DTI or other reasons, we typically go to our FHA options, which allow us to have a higher DTI ratio and some other benefits as well. Please get with our loan officers if you'd like to learn more about the FHA programs. But we'll set everything up the same: purchase, 30-year fixed, primary, single family, Miami-Dade, 760 FICO, 40 DTI, and let's check out what we have for FHA this morning. So the top of the stack here, FHA 30-year fixed, 5.5 rate. Again, that's I think a little bit better than yesterday for a 1 point in buy down. And remember, on FHA, there are other costs to consider. So make sure you key in on the APR when you're comparing FHA because there is a monthly mortgage insurance that must be paid and an upfront mortgage insurance for those specialty FHA programs. Now, let's go back to the quick pricer and check out our other options. If a borrower does not qualify for conforming our FHA, of course, there is the VA program for our veterans that have served in the armed forces. If you qualify, that is amazing. We can quote that up for you, but not everybody qualifies it because not everybody has served, obviously. So if you do qualify, please get with our loan officers. They'll quote you up in just a few minutes. USDA is for the property. So remember, your property must be in a rural area for a USDA quote. So if you think your property that you're looking at is in a USDA area, please get with our loan officers. They'll send you that quote in a few minutes. But for a typical property, if you don't have conforming options available or FHA options available, most lenders don't have other options. That's where we come in as the mortgage calculator. We specialize in alternative income documentation programs. So you'll see here our expanded guidelines. That means non-QM, basically our alternative documentation programs that allow us to go outside the box of the conventional and FHA programs that we're all used to. So we're going to pull up our scenario again, same scenario. Obviously, the rates are going to be a little bit higher on these non-QM products. Remember, they're non-government insured. They're non-conforming products. So these are a little bit different, but we do have options for borrowers who would not otherwise qualify. So we pull up expanded guidelines, same thing, purchase, 30-year fixed, primary home, Miami-Dade, same credit, same DTI, but instead of doing a full doc loan with tax returns and all the stuff we're used to for a conventional loan, we can qualify a borrower with alternative income documentation, whether that's 1 year of alt doc, 2 year of alt doc, or we have specific types here listed as well. We can do asset related loans, which we talked about yesterday in our Daily Rates Live. We can do business bank statements. 12 and 24 months are the most popular, but there are a few other options. DSCR is what Jose is going to go in deep dive here in a minute, but that's only for investment properties. And our most popular option here for a non-QM option for someone who may not qualify for a conventional program or FHA is going to be using their personal bank statements. That's typically going to be for a self-employed person who wouldn't qualify using their tax returns, but they do make a decent amount of income, which we can document with 12 months of personal bank statements to then determine their debt to income ratio. And now this borrower is back in business. We can qualify them for a loan. But remember, these are specialty products, so they will be a little bit higher rates. But let's check out what we have available today. So there's a few different options here. They're going to vary kind of widely because these are specialty programs. So we have, dozens of different options here. They're going to vary from, very high rates for very specialty cases, such as a credit event, like a foreclosure, things like that. That's great reason to use these non-QM programs if you wouldn't qualify for other reasons, such as credit events. That's at the bottom. But here at the top, we have some great options. So We have some options for bank statements here from 7.5 for about 1 point, 7.625 about 1 point, and it just varies here on all these various programs. Every program is a little bit different for a very specific type of borrower. So please get with our loan officers. They'll navigate you through here, but it looks like we have rates between the 7s and 9s typically for these non-QM programs for people who would not otherwise qualify. So these are great options to get our borrowers into properties that wouldn't otherwise qualify. Now, let's switch gears here and go into investment properties. So we here at the Mortgage Calculator, we do specialize in investors. So these are typically our most common requests is for an investment property purchase. And specifically, we get a ton of requests for a short-term rental property purchase. Someone that plans to rent it out short-term on Airbnb, VRBO, any of these other short-term websites. So let's pull up some options here to compare conforming conventional loan for an investment to our amazing non-QM program options. So let's pull this up again, do everything the same, except we're going to do investment property this time, 80 LTV. We're going to look for something with 1 point of buy down. And we're going to do a conforming option first, and then in a minute we'll get into expanded, purchase, 30-year fixed. Everything else is going to stay the same. Let's check out what our conforming options are. Remember, like I say every day, the conforming loans, there is a basically penalty or fee that has been added by the GSEs, the government-sponsored entities, Fannie Mae, and Freddie Mac here. So they have added a large adjustment here to these loan types for investments. So you'll see there aren't any options for 1 point buy down. They have great rates, but these extra fees do increase the cost. So just keep that in mind. A lot of our investors don't want to pay a large amount of discount points. So because we can't go really higher in the rate on a conforming loan, you're stuck paying a decent amount of points. So this is where our investors say, what other options do you have? And a lot of our investors don't want to qualify with tax returns on a conforming loan, as well as a lot of our investors have already maxed out their conforming loans. Remember, you can only have a maximum of 10 Fannie Mae loans at any time. Some of our investors have 100 properties. So how are you going to purchase more investment properties if you've already maxed out your conforming? That's where we come in with our amazing non-QM options. So whether you're looking to just have less points or you're looking to use just totally alternative documentation because you've maxed out your government-sponsored, conventional loans, we're going to come over here. We're going to pull up expanded guidelines. Same thing for 80 LTV, purchase. Everything else is going to stay the same. But over here on income verification, we can add our alternative documentation. Now, the number one request and the number one reason to go non-QM would be to gravitate to our DSCR programs, which allow us to document the income with just the property income. No personal income, no tax returns, no income verification, no employment verification for the investor. So this is what's most popular for the investors that have either maxed out their conforming loans or just wish to purchase more of a business purpose loan that has less paperwork and less requirements basically to get into those investment properties. Here on our investment non-QM, we're always going to add a prepayment penalty. That's pretty standard. There are options for no prepayment. That's just going to have an increased cost. So, don't be scared of the prepayment. That's just kind of the standard way these non-QM investor loans are priced. So we're going to price it with a standard 3-year prepayment penalty. Now let's check out what our rates are here for our DSCR programs. So we have some amazing programs here from 8.375 rate for even less than 1 point buy down, which is pretty amazing, and around 8.5 for about 1 point. And you see we just have a bunch of different options here available for our investors. And there's just a ton of options here with different DSCR ratios and different program guidelines, different prepayments, etc. So please get with our loan officers. They can give you all the different options on these. And of course, some of these programs do allow short-term rental, and some of these programs do not allow short-term rental income. So that's where Jose is going to go into a deep dive and explain which of these exact programs can apply to a short-term rental property, such as an Airbnb or a VRBO. So let me go ahead and pass it over to Jose here, who can explain a little bit more about what he's about to present, and then I will pull up the detailed quotes. So go ahead and take it over there, Jose.
All right. How's everybody doing today? Thank you for joining us for the daily rates. We have some nice options today that we're going to talk about because, as you all know, Short-term rentals are all the rage, and rightfully so, because they do offer the opportunity for much higher rate of return on your investment. I mean, typically in the past, you'd have investors saying, "Oh, we're fine with 6%, 7%, 8%." Well, the only way you're going to achieve that and much more in today's rental markets is through the use of short-term rental options, like renting your property through Airbnb, VRBO, home away, and in some cases, you can even duplicate and more your gross rental income. So the first option I'm going to share is going to be for a 15% down DSCR option. Now, with this option, it does allow us, to use short-term rental or to get a short-term rental income property for a purchase and finance it with this option. So, as you can see here, pretty good rate still, considering this is 85% LTV. Right now, the only other catch to this option to be able to take it to an 85% LTV is that they do require a minimum 1.25% debt service coverage ratio, which means that when you divide the property's gross market rent as determined by a 1007 using long-term rents, the ratio has to be at least 1.25, which means that the market rent has to cover the housing expense by at least 125%. So if you do have one of those very good cash flowing properties, typically happens on the lower price properties that are rented very well, long-term rent, then you can get this option where you're looking at rate starting, the lowest cost rate starting at 10.125 with buy downs possible all the way down to 9.375. And at 10.125, that's roughly almost 2 points there on the loan discount to be able to buy it down to that option. So again, 15% down, highest LTV option, 1 unit property only. Also, is going to be another catch at the 85% LTV. But for that borrower looking to maximize their LTV, this is it. And again, being DSCR option does not require any personal income nor any employment verification required from the borrower. Borrower is qualified based on credit, assets, and the DSCR ratio of the property. So that's an 85% option using 1007. So now I'm going to show you the 20% down option using the 1007 as well. Again, we can use this for our short-term rental properties for purchases, which is what we're discussing here. Now, you will note how the rate gets substantially better when we drop it down to 80%, because 85% is really the extreme outlier in this market. Nick was mentioning volatility in the mortgage markets, in the secondary that we're having, and so there is a flight to quality, and the quality is seen typically at 80% or below, where they feel much more comfortable buying these packages of billion-dollar tranches of loans. But you will see here at no loan discount, which is very amazing, you're looking at 8.875%. So I'll put this into perspective.
Even a little credit there. That's amazing.
Yes. $100 actually, 8.875. I'm sorry, I missed $100. I'm so used to not seeing lender credits. I totally missed it. I was looking at the zero on the points, but there is a whole Ben Franklin right there for you at 8.875% interest rate, right? So to put this into perspective, conventional rates on an investment property full documentation, tax returns or pay stubs, W-2s, tax transcripts, whatever DU is going to tell you on that conventional loan, is probably going to be somewhere around 7.5%, 7.25%, 7.5% best case scenario for a purchase. And you're probably, if you can get it at 80% LTV, you're probably going to be looking at like 2.5 points, something like that, 2.5 to 3 points at an 80% loan to value in a conventional. So when you look at this scenario here, it's pretty much the same price because we have a $400,000 loan amount. So at 7.875, we're roughly 2 point something points. So I would say that this option is probably priced as well as the conventional option, except this option doesn't require any personal income from the borrower, no job. And if you're really pressed to close quickly, you don't have to worry about tax transcripts. 4506 is being processed because you had to use tax returns for your qualification. So again, a lot of things that allow you to be much more competitive in this market where, we still are dealing with multiple offers. So when you come in with a DSCR pre-approval on a purchase, they really love it because they know you're empowering the listing agent to know that their property is a good property and it rents for X dollar amount. They know there's no problem going to be with the income. We've disclosed credit scores, all that, assets are good. Maybe you show proof of funds to further solidify the offer, and it's a no-brainer for them. They know their property is good. So here we can go as low as 7.625 at almost 3 points, and that is an amazing deal for 80% purchase for a short-term rental property. So now we go for the option that allows us to use the short-term rental income for a 20% down purchase property. Now, this is a very good option if you need to capture a little extra income from the 1007, more income than the long-term rent will allow you to qualify for. So this option allows you to capture 115% of the 1007 income. So, you want to squeeze out a little bit more and hopefully make that 1.0 DSCR. This is a good option to do it, but you will know, rate is a little bit higher. You're looking at 9.375 costing you 3/4 of a point. And then from there, you can buy it down to 8.375 costing you, I believe, like it's roughly 3 1/8 of a point around there at 8.375. So again, this is great for that property. May not DSCR with the long-term rent, but you got the short-term rent. And then if it's higher than the long-term rent, they'll let you gross up your short-term rent by 115%. And in the scenarios where we can actually capture, right? I mean, this is something that's, a little bit more difficult to do. But with this option, in the scenario where we can actually capture short-term rental comparables directly onto the 1007, if we get that kind of a scenario that occurs here, there are no restrictions with using that data, and then they will let us use the full short-term rental income to be able to qualify the property. And then that's where the magic really happens, especially for those more expensive trophy properties, waterfront properties where, short-term rental, you're getting, $3,000 a night, but long-term rental, maybe you get $8,000 a month. You can do the math very quickly there and see that you're really going to hit it out of the park with that option. But it has to be in a market that will have short-term rental comps readily available for the appraiser. So, you're not going to do it in the middle of nowhere where they may not be that much short-term rental activity, but in, like the beach markets or the lake markets or the ski markets, stuff like that, where you do have a lot of short-term rental activity, there's a very good probability that we will be able to obtain those short-term rental comps and then totally be able to hit it out of the park at the maximum LTV. Now, I would say, should an issue arise, worst case scenario that you can't do it, and I didn't queue up a quote for that option, but I will note here, since we're about to go into the cash out options, that there is an option where we can go below an 80%. Where we can go, if the DSCR is below 1.0, we just drop the LTV down, usually to 75%, or in some cases it may have to go as low as 70, depending on the loan amount. But then the DSCR would not be a play. That would be our no ratio DSCR options. So we can, under a worst case scenario, still close that loan at a little bit lower LTV. But most of the time, 9 times out of 10, everything works in our favor, and we are able to structure it at the higher LTVs, which is what all of the investors like. So now I'm going to go to cash out options, and we're going to go to the 1007 STR DSCR 75% LTV option, right? This one, you can see are pretty good rates here. Now, with this one, it does require one of two things to happen. You can either, actually, one of three things could happen, right? You can either, no, excuse me, with this one, it would be 1007 long-term rent, and or using the 12 months activity, either or, to arrive at a figure. But you see, we're got 9.125 is the rate we're talking about here. Roughly 0.5, 0.625, I believe, is the points on that at 1781. And then you can buy it down to as low as 7.875 rate. Very good option. But we also have an 80% 1007 STR option. If we could share that one. The 80%. All right. Now, I want you to see the other one had 9.125 as the lowest cost option rate. Now, this one, obviously, taking it to an 80% is going to have a higher rate. But now, again, for that investor that says, I want the maximum LTV, this is a very good option, 10.25%, costing almost 2 points. Costing almost half a point, 10.25, and then you can $1,900, and then you can buy it down all the way down to 8.875, costing a little bit over 3 points on that option. Again, this is 80% short-term rental using a 1007, which uses long-term rents. But if you can get it to cash flow on the long-term rent, they'll do the property for you up to an 80% LTV. So now, if we have going out to the 75% option, cash out for a short-term rental, right? This would be the best of both worlds here, where we're possibly looking at that more expensive property where we need to capture the actual short-term rental income by actually putting those short-term rental comps on the actual 1007, or by providing the last 12 months of short-term rental activity from from your platforms, Airbnb, VRBO, HomeAway, etc. You provide the revenue report, and then they gross that up by 115%. But if we're lucky enough to get the appraiser to actually put the suitable short-term rental comps on the 1007, we can use them without any type of restrictions. And then you have anywhere from a 9.375 rate, buying it down to an 8.375 rate. So again, very, very good options for a DSCR, no job required, no income required, short-term rental property generating a very high rate of return. This would be the unicorn for most investors, but most of them find those unicorns when they come to deal with the mortgage calculator, because we're very creative and think outside the box when we're offering solutions to our investors. So really exciting times when we do deal with our investors, and looking forward to helping all of you that are on this call today.
Perfect. Thank you, Jose. So I just wanted to touch base real quick before we get off here. We have 350 loan officers across the country here. We can all help you out with any of your needs. And what you can do is go to themortgagecalculator.com, which is right here below, or you can email us at info@themortgagecalculator.com so we can pair you up with a loan officer. Now, I do want to make note that our loan officers are full consultants. So not only can we help you with the conventional FHA, VA, USDA, all the normal type of stuff, but these programs that we went over here today, they will consult you and figure out the best programs for you, whether it is, bank statement or asset utilization or DSCR, and some of these DSCR loans that offer short-term rental solutions. We also do ground up construction, fix and flip, and everything in between, right? So get with one of our loan officers. Maybe you already are working with one. That's great. If not, go ahead and visit us at themortgagecalculator.com so we can pair you with one of our loan officer consultants. So we do this every morning. So we will be going over the live rates again tomorrow morning at 11 a.m. So you can catch us then. In the meantime, everybody have a great day, and we appreciate you tuning in.
Thanks,
Take care,
everybody.